In recent years, the United States has implemented several tariff retaliation measures against numerous countries around the globe, with the goal of addressing perceived unfair trade practices and balancing trade deficits. These tariffs can have profound effects on both the targeted countries and the broader global economy. Today, we'll take a look at the top 10 countries that have been most significantly impacted by these tariffs, and how these policies have shaped their economic relations with the US. Singapore, known for its robust economy and strong trade relations, faces a 10% tariff rate on many goods exported to the US. While this is lower compared to other countries on the list, it still has a significant impact on Singapore's export economy. The primary sectors affected include electronics, machinery, and chemicals. These tariffs have made it more difficult for Singaporean businesses to maintain competitive pricing in the US market, although trade relations between the two nations remain strong overall. The EU has been hit with a 20% tariff on exports, including agriculture, luxury goods, and aerospace components. These tariffs have complicated trade in wine, cheese, olive oil, and aircraft parts. EU exports to the US tensions persist as both sides seek resolution. Malaysia faces a 24% tariff rate affecting key sectors like electronics, palm oil, and rubber. These tariffs have impacted Malaysia's export-driven economy, particularly electronics, which are essential to US supply chains. Both countries are working to navigate the effects through dialogue. South Korea is subject to a 25% tariff rate on products like steel, automobiles, and electronics. These measures have prompted Korean manufacturers to reassess supply strategies and cost structures. Despite these challenges, South Korea continues to be a strategic and economic partner of the US. Japan, another major US trading partner, faces a 24% tariff rate on its exports to the US, impacting a wide range of industries such as automobiles, machinery, and consumer electronics. The auto industry in particular has been hit hard, with tariffs impacting the price of cars imported into the US. Despite these challenges, Japan continues to be an economic leader in the global market, with its companies maintaining a strong presence in the US market. However, these tariffs have raised concerns about future trade negotiations and their potential impact on Japan's economy. India has been subject to a 26% tariff on a range of exports, from agricultural products and electronics to textiles. The retaliatory measures have raised import prices in the US and strained bilateral trade. Nevertheless, India and the US maintain strong ties, especially in the technology sector. Taiwan faces a 32% retaliatory tariff rate, mainly affecting high-tech exports like semiconductors and electronic components. As a crucial technology partner to US industries, these tariffs have complicated supply relationships and increased operational costs for American firms dependent on Taiwanese components. The trade war between the United States and China has been one of the most well-known global trade disputes in recent years. China has been subjected to retaliatory tariffs from the US, with the rate standing at 34% on many products, including electronics, machinery, and consumer goods. Furthermore, China faces additional tariffs, which push the total tariff rate above 54% in some sectors. These tariffs have caused significant disruptions to supply chains and increased costs for US businesses and consumers who rely on Chinese-made goods. Despite these measures, China has remained a key player in the global economy and continues to maintain a strong trade relationship with the US, though the tariffs have undeniably put a strain on that relationship. Source: vneconomy.vn Cambodia ranks as one of the countries hit hardest by US tariff retaliation, with an impressive 49% tariff rate applied to its exports, including garments and footwear. As Cambodia's economy heavily relies on textile manufacturing, this tariff retaliation has significantly impacted its major export sectors. The tariffs have led to increased pressure on the Cambodian economy, with some manufacturers looking to relocate operations to other countries to reduce costs. Despite this, Cambodia continues to be a vital player in Southeast Asia's manufacturing sector. Vietnam is one of the countries most heavily affected by the United States' retaliatory tariffs, particularly in industries such as textiles, electronics, and agricultural products. The US has imposed a retaliatory tariff of 46% on several Vietnamese goods, which has had a significant impact on the prices of products imported into the US. Despite these tariffs, trade relations between the two countries remain robust, Vietnam continuing to export a wide range of goods. However, the imposition of such high tariffs has led to increased costs for US consumers and businesses that rely on these imports. In conclusion, these 10 countries represent the highest-ranking nations that have faced US tariff retaliation. These measures have had significant impacts on their economies, causing disruptions in trade and leading to increased costs for consumers. As global trade policies continue to evolve, it will be interesting to see how these nations adjust and whether further retaliation or trade negotiations will occur. Thanks for watching, and make sure to subscribe for more insights into global trade issues.